Hello and welcome. Thank you everyone for taking the time to join us in this webinar on open banking. My name is Scott Raspa and I'm the Director of Growth here at Hydrogen. Our presenter today is our very own Matt Kane, co-founder of Hydrogen. Before I turn it over to Matt, I just want to cover a couple of things. Now, there will be a time for a brief Q&A after the presentation. However, if you have any questions throughout, please feel free to type them into the Q&A section in your Zoom pop-up window. You should see a button at the bottom that says Q&A. These questions that you type in, they'll only be seen by the panelists or hosts of the webinar, but we'll try to address as many of the questions as possible at the end of the presentation. So without further ado, I'm going to turn it over to you, Matt.
Yeah, thanks for the intro, Scott. I really appreciate it. Hi, and welcome to Hydrogen's webinar on open banking, September 19th, 2019. Thank you to everyone who has joined us from around the globe as well. My name, as Scott mentioned, is Matthew Kane. I'm the co-founder and head of product here at Hydrogen. So to start, for those who have joined that are not familiar with Hydrogen, I'll give a very brief intro to our firm before we dive into the topic at hand. So Hydrogen accelerates digital financial innovation by enabling organizations to quickly build hundreds of different solutions in wealth, savings, insurance, wellness, and blockchain using one platform. And this platform consists of a powerful toolkit of one connected set of configurable APIs, one integration library, and one standardized data model. And then we add some business logic and modular UI components on top of that to help you really build end-to-end financial applications. Our internal research has shown that Hydrogen-built solutions typically cost 80% less and take 1/4 of the time to build compared to competitive offering of building on your own or through a third party. So with that aside, we can now get to the topic. And I think to start, the big question at hand is, what is open banking, right? So let's answer that basic question. At its core, open banking is the ability for banking customers to authorize third parties to access their bank account data to either collect account information and or initiate payments. So the key thing to stress here is that customers will authorize this access. So you cannot get the data without the customer first opting in, giving you the credentials and giving you the authority to access that data, and that's very important to know. So to illustrate this concept, let's look at a simple diagram courtesy of Deloitte. So on the left, you'll see a traditional closed banking ecosystem where customers interact directly with their bank and all their data stays within the walls of the siloed bank or institution. Now, if you look on the right, you'll see a more modern open banking ecosystem. Now, you could see that banks allow third-party tech companies and developers to access customer data. And this enables them to build solutions on top of this data and also in conjunction with other data sources and customer inputs. And you'll see the example here of a price comparison website. So now this solution can be easily used by the same client for added transparency and also a better customer experience. So that's open banking in a nutshell. Now, some of you on the webinar may have heard the term banking as a service or BaaS, and often these are used interchangeably. However, open banking and BaaS are quite different, and that's the next topic that I wanted to cover. So if you look at banking as a service or BaaS, and it's a solution that connects fintech companies to banks via APIs. So this allows companies to build consumer banking products on top of banks' regulated infrastructure and charters, which the fintechs don't have, right? And they're very difficult to get in markets like the US and others around the world. And this will give you the ability to offer government-insured checking and savings accounts, debit cards, payments, and other banking functionality you would expect from a large banking institution. However, the caveat here is now the fintech doesn't need really much, if any, regulatory overhead. So that's all shifted over to the traditional banking institution. So BaaS actually offers banks with licenses and also traditional business models a new digital distribution model, and the ability to acquire customers without marketing expenditures, which are now done by the fintech companies. So it's a very smart way to gather clients and assets without really being out in front of the customer and spending hundreds of millions of dollars on marketing. Now the fintech is going to do that. So you could see an example on this slide with the Spanish bank BBVA. So they actually offer, and one of the unique parts of BBVA is they offer both open banking and a BaaS, which is unique to them. So on the left, they have open banking APIs, and you'll see that they allow developers to access read-only data, such as customer account details, pre-approved loans, and you could use these now to build value-added applications on top. On the right, you'll see an example of their BaaS platform. And the top right, you'll see a Simple, which is a challenger bank that they acquired. And it's a white label bank built on top of BBVA's infrastructure. So this allows a fintech to create branded bank accounts, as they show you in some of the features, move money, and issue debit cards. So you can see the contrast here between actually creating accounts for clients at the regulated institution versus merely reading data that the customer gives you access to then build applications on top of that. So with that out of the way, let's take a look at the open banking landscape around the world. So this map is provided by CB Insights, and it shows you, really how open banking has grown wildly in popularity over the last few years. So as many of you on the call may already know, Europe has been at the forefront of open banking, really, and it has pushed the rest of the globe forward with innovation. Now in North America, you'll see Canada, the US, and Mexico highlighted. Mexico has already passed open banking laws and regulations, and Canada is also expected to have a government ruling in the first quarter of 2020. Australia, on the bottom right, you'll see is the latest Commonwealth country to undergo open banking reform, and that's through a regulation called the Customer Data Right, or CDR for short, that was passed by the Australian Parliament. And then sprinkled in there, you'll see some interesting markets such as Nigeria and Brazil, so some more emerging markets that have also really embraced this open banking initiative. And that's important to note because you have a very strong, growing, emerging middle class in these markets, and they're starting to really need more banking solutions, especially through mobile devices. And that has really grown with the economic growth of these markets. So let's take a little bit deeper look at PSD2, which is the regulation that was passed in Europe. So this is the most robust implementation in the world currently of open banking regulation. It was passed by the European Union a few years ago now, in November of 2015, and it's actually administered by the European Commission. So the purpose of this directive was to increase competition in the financial industry from non-banks and to add more consumer protection with financial providers. So providers of payments or financial accounts online must now allow third-party providers to access user accounts with, again, the user's explicit consent. So you'll see on this map, this graphic on the slide, there are actually two different types of services they can provide. So on the left, you have a payment initiation service provider, or PIS for short. So they're authorized to make payments on behalf of a customer. This means you can initiate a transfer directly to or from a payer's bank account using the bank's own tools. Now you'll see the traditional workflow is very complicated. It involves a convoluted network of processors, card networks, and banks. But now with the PIS, you could cut out processor and card network entirely and just initiate the payment directly from the issuing bank. Now on the right, the other initiative is called an AISP, Account Information Service Provider. And that is a little bit different, and that's a read-only, and that allows a company authorized to access an individual, or it could be SME's account data as well, from the financial institutions with their consent. So now you can see we have some logos here of some aggregators and tech companies like Plaid, MX, and Yodlee in the US, or Tink and SaltEdge in Europe, that now through API connections directly through banks can access all of that data and provide it back to the customer in some solutions, which we'll get to in a few seconds. So to really just dumb down the AISP versus PIS comparison, you'll see it's read versus write. So you're reading data with the AISP providers, and account data will be read from them, versus writing and actually directing payments to and from someone's account. So that's really the big difference there. So, as I mentioned, there's quite a lot of data that now you're getting back, and it's all open. But really, what does this allow you to build? Now, exposing data on its own doesn't add too much value to an end consumer, right? Unless there are solutions that are built on top of that actually solve a real customer problem. Now, the most common use case, and some of you have used these apps for open banking data, is for PFM, which is short for Personal Financial Management Tools. So with these tools, you can now provide a user things like a 360-degree holistic view of their wealth through a dashboard to track their assets, liabilities, and net worth over time. A user can now track and create a budget against transactions aggregated from all of their financial accounts. Wellness, which is a fast-growing part of the fintech landscape now. You could add a whole lot of features such as financial health scores and alerts, portfolio optimizations, comparison tools, demographic benchmarking, smart monitoring and alerts. And then on top of that, there are advanced features, and you may have used apps that have chatbots, machine learning, speech recognition from something like Alexa, data cleansing on top of the data that comes in, visualization. You could take all these and really augment these solutions and have a very, very powerful end product that's quite differentiated for the end client. So really, opportunities with this new data set are endless, and this is why this has become such a hot button topic and a very quickly growing part of the fintech landscape. So the last part here, we just wanted to highlight very quickly, how we can help. You might be asking, what is Hydrogen's role in the open banking ecosystem? So there are actually 3 ways that you can leverage Hydrogen within open banking. So let's go through the first one. If you're on the webinar right now and you're a bank or a financial institution, but you have not exposed any APIs and you have not built APIs with your data, what you could do, and this graphic will show you, is you could take the data. Hydrogen can transform that data, and through our APIs, actually expose those into what you see here, which is Hydrogen's documentation. Now that could be white labeled. You could think of it as a developer as a service offering. And what that allows you to do is take Hydrogen's best in class financial API standards and resources and bring that to developers. And now developers can build solutions on top of your data without potentially you spending the resources or having the overhead of building and maintaining those APIs. So that's the first way that Hydrogen can work with you on the open banking initiatives. The second way is, you might already have open APIs. Now, if you're in some of these markets, it has been mandated already to do that, right? So you probably already have some APIs in place that take in customer data. Now, again, the customer data on its own doesn't do a whole lot. Now you're mandated to offer it. But really what Hydrogen provides is a solutioning platform on top of that data. So you'll see that here in this graphic that, we will add things like business logic, orchestrations, UX, financial engineering on top of that data. And the output is the UI. You can either white label that from us or build on your own to actually build end solutions. And those could be internal tools and analytics for your users in-house. They could be externally for both retail and commercial banking clients, such as SMEs. Really, the opportunities here are very large once you have this data. The key point here is, though, without adding the added logic, some of the UI, and really that experience on top, the data on its own is only, it's not as good as the end solution. And that's really where Hydrogen comes in, is that solutioning platform in the middle that helps drive that product and really gives the client the best experience possible. And then lastly, the third solution is for any developers or more on the tech companies on the call who are not financial institutions. So you actually can build on the open banking data that is provided by the banks and institutions. So you can see that in the graphic here. On the left, you have the banks that are feeding in the data. Now, that data will be consumed by some of the aggregators. So these are APIs from Plaid or InvestNet, Yodlee, Tink, MX, SaltEdge in Europe. And then Hydrogen actually has an integration framework into these data aggregators. So what we do is we transform that data into one standard data model, right? And that's across all of the different data you would have with Hydrogen. We also add business logic, orchestration, UI, UX, and we have an entire integration library of other integrations into data feeds and moving money via ACH, CRM, support, machine learning, you name it. So now what you could do is, as a developer, you could consume that and really build very powerful end-to-end solutions. And this could be with functionality across wealth, savings, insurance, blockchain, and wellness. And this will now provide, very feature-rich user experience and powerful product suite for your end customers, where, if you're just getting the data directly, you would have to add quite a lot of functionality and do a lot of processing on that data to build the end solution. So again, these are three solutions. You probably would fit into one of those buckets. Either you don't have the APIs built now, you do have them, and you needed some added processing and a lot of the added business logic and functionality built on top of that data, or you're a developer that wants to build either direct-to-consumer or even B2B2C solution through Hydrogen and access some of that data that the clients have given the banks and now the aggregators have. So those are three very powerful solutions that Hydrogen provides, and we'd be happy to chat with anyone after the call if you're interested in any of those. So, I wanted to open up the webinar to Q&A. We have 5 to 10 minutes left here. Again, this is Matthew Kane, the co-founder of Hydrogen. Here's an email, partner@hydrogenplatform.com. And thanks everyone for listening to the webinar. Hopefully you found it useful, and we would love to chat with you more about this topic. So, Scott, do we have any questions from the group so far?
Yeah, thank you, Matt. That was awesome. A couple of questions have come through. So the first one is, do you foresee the U.S. enacting similar legislation to PSD2 as in the EU?
Yeah, great question. So I actually don't think that similar legislation would be enacted in the U.S. Now, you have had screen scraping in the U.S. that's been prevalent for 10, even 20 years. For those who remember Quicken from Intuit, who was really industry pioneer here. But most recently with Mint, who Intuit also owned for consumers, and QuickBooks for small business. So in the U.S., banks really allow this access to scraping agents. So Intuit, Yodlee, Plaid are a few of the largest ones, and others because millions of Americans have relied on this access for quite some time. So to take that away, and if any of you on the call remember, this has been taken away by a few institutions, and it made the cover of Wall Street Journal. And really, they faced the wrath of consumers. If you're on your QuickBooks and suddenly it stops working, you're not going to be very happy with that bank. But what is happening is the largest tech and banking players in the U.S. have come together in a sort of a consortium to push for common standards. Now the difference really is between the U.S. and Europe, in that the U.S. you tend to have bottom-up innovation that's driven by entrepreneurs in the private sector versus more of a top-down, government-driven innovation. And really in the U.S., once the innovation happens, the regulators normally wait for it, then come in and either regulate it or provide some framework and oversight.
Great. Another question that came through is, what sort of data models are available for banks like retail or wealth?
Yeah, sure. So the data model at Hydrogen is a standardized one where we would take data, let's say it's account data. So this would be a user's account. So, what type of account it is, the holdings, the transactions over time, and this would all be timestamped so that you could track it over time. And for wealth as well, you would have things like orders, potentially statements. And on the banking side, you have, obviously you have, once you get into the payment side of things, moving money around and loans. So there's quite a lot of data that's collected. Now that in Europe, that has been standardized in terms of how you need to enable that data through APIs. Through Hydrogen, we do have a standardized data model to display all of this data across clients and accounts and investment portfolios. So either that's from your application that you build on Hydrogen, or it could be from third parties like a Plaid or Yodlee. So we've actually standardized all that. We transform the data into one common API set, and that allows you to, ingest very clean data, such as a client's portfolio holdings over time.
Okay, great. And another question that just came through is, do we support, or do we currently support blockchain, Oracle/smart contract integration?
Yes, we do have a blockchain product called Molecule, which we did not cover in this webinar. So the blockchain solution that we have is focused on identity management, and particularly KYC, and having an on-chain identity. And as well as tokenization, so tokenizing off-chain assets such as real estate, art, or even a public or private security. And then we're moving into payments, so peer-to-peer, remittances, and invoicing. So that is it's a good topic, because really what we do is provide a value-added blockchain component on top of a more centralized or off-chain model, which is our core Atom platform to power the financial solutions. And you really could take some of this open banking data and use our APIs and potentially add some blockchain components for either immutability or security and decentralization. And you could create a very powerful product suite with that added on top. Now it's all part of the same API suite. So once you're a client on Hydrogen, that's why it's called Hydrogen. It's atomic element number one. So it's one platform, and it's really one API integration. And once you come on Hydrogen, you can move into blockchain. You could add integrations to third parties. You could really do quite a lot of things.
All right, and one more question here. Which financial institutions would you say have been the most innovative?
Yep, that's also a great question. So you noticed in the presentation, we went through BBVA. So that's a Spanish bank. Also, they have operations in Latin America and the U.S. So they've really made digital the key part of their business strategy. It's really a digital bank now. So they're probably, if you look at a 2x2 quadrant, they're really on the top right. Now you have challenger banks in Europe, such as Starling and Fedor Bank, which are also very innovative. Now they're built on newer tech stacks, so they've been a little bit more progressive with their data. I think if you move towards Asia and Southeast Asia, DBS has been really at the forefront here, and as well as OCBC. They've kind of led the way in that region. And then closer to home here in the U.S., there have been a few banks that have I think have really done a great job. Citi and Capital One actually are two that I would point out that I really think I've invested heavily in open banking initiatives, and I think the U.S. is in good shape here to follow Europe's lead.
Great. Well, I think that concludes all of the questions that we had. Thank you very much, Matt, and everyone that attended this webinar. We did record this webinar, and we will be posting this to our blog and social media accounts, so keep a lookout for that. But that concludes this topic around open banking. Thank you.
Thanks, everyone.